Thank you, thank you. Okay, we're live now.
Tonight's regular council meeting is being live streamed, audio and visual devices in use, and we'll record this meeting. Agenda. Any other additions?
Yeah, I just have council procedure bylaw. I was given the incorrect dates by April 30th, we have to have a bylaw for public hearings. So that the public has access to all public hearings, can communicate and speak and hear from council through a public hearing electronically. So.
I'm gonna warn you that I cannot mute, so it might go off a second time.
Oh. Yeah.
Overrides everything.
So that's
So
that's my addition
Somebody want to adopt agenda with additions
as amended.
as amended?
I'll make the motion to adopt the agenda with the amended motion.
All in favor? Carried. 3.0 guest, Gregory Harriman and Associates, your audited financial statement. Welcome, Shelley.
Thank you.
No, Jenna.
No, Jenna, no.
So go ahead.
Okay, so I have circulated to you a package with financial statements and as well a management letter and then a debt limit calculation worksheet. So just as a refresher in regards to these statements and how it works, your top statement, it's going to be easiest if you take that package part. The top statement will be the consolidated statement. So the consolidated statement is comprised of the Village of Standard as well as our 25% interest in WRC. So that's why it says consolidated, and that's what the consolidation is about. The main statement we will go through, though, is your secondary statement, which is just for the Village of Standard. I am going to refer into the other statement somewhat, though, so hopefully I don't have to keep you jumping back and forth too much, but it's just there's some note disclosure in the consolidated that we don't have in the Village of Standard. So where we'll start on the Village of Standard one is the statement of financial position, which is page 1 in there. So yeah, let's see. Yeah. In the skinnier statement in the front. So this is just the village itself. It doesn't have any WRC information comprised in it at all. So based on that, reflective of a good financial position, your net financial assets, you'll see partway down the page there, 1.1 million. And the prior year were $1,068,000. So your net financial asset value is reflecting really of your liquid assets, so being cash or receivables you're going to collect, things such as that, and land held for resale. It's evaluating those against the liabilities of the village. So liabilities being your accounts payable, deferred revenue, and long-term debt. So the loan that financing that we owe back in regards to the subdivision development too. So when that's positive, that's always a good indicator of the financial wellness or status of an entity. So we'll just kind of go through the assets, financial assets and the liabilities and chat about them as we go along. So your cash position you see there, it's up by a couple $100,000 in the year. You're at 773 over 572 the year before. Now, our only concern, so of this, there's about 300,000 of that balance is just what you have in the bank. And then as well, there's a T-bill account for about 400,000, which is what we hold to cover reserves that we've set aside for future projects or future capital projects and operations as well. Now, whenever we speak about cash, our concern is always that we are holding enough cash to cover off the reserves we've set aside, which council has approved, and then also any deferred revenue that we have. So deferred revenue is made up predominantly where you've received funding, so maybe MSI funding or other grant funding, but you haven't expended it yet. So based on that, by the nature of it, if you've received the money and haven't spent it on what you're supposed to yet, then we're counting on you have the cash, right? And just when you look at your reserve balances and along with your deferred revenue, that balance is about 260,000. So your cash is well above what you need to cover off your reserves as well as those deferred revenue amounts. So that's good. On your taxes and grants in place of taxes receivable, pretty consistent balances. You don't really have issues on collection. You have some, I think, that are going to tax sale or on to recovery. But in general, in your current year amounts, you have pretty good recovery and collection. I think even in the indicators, it's about 95%. So municipal affairs does some benchmark measurements. I don't know. Do you discuss those at all, Yvette?
There used to be a sheet that would show us
Oh.
that, and then,
I could. I
Yeah.
have a sheet for that.
I think it's usually in there, isn't it?
Well, you probably don't have it on here,
Oh.
but Jen, can I bother you to copy that? No, bother at all. That would be great. Just that back page. Thanks so much. Yeah, yeah. Anyway, so we'll talk about those once you all have a copy of them. Yeah. And then your trade receivables, the difference there in the year, the 60,000, it's made up of mainly some amounts between the WRC owed you at the end of the year and as well as Standard Fire owed you. That's kind of indicative of in your receivables and your payable. You owed amounts to those two entities and they owed you amounts as well. The reason it's so different on your receivable from the prior year, we had a large amount from Memory Lane that was outstanding that we were to receive was about 56,000. So that's mainly that difference there. Your other financial assets, they're showing at a consistent value and they're really made up of your investment in WRC. So it's the preferred shares of 260,000 shares that you held, as well as your common shares in WRC. And then there's some UFA equity in that balance as well. Thank you so much.
Thank you.
And then land inventory held for resale. I'm sure you're all very aware of what that's about because you've been having some activity with it recently, which is good news. Maybe not for the value you wanted, but still they're moving, so that's good.
Yeah.
Yeah, I understand from Yvette, you only have one lot left in your west subdivision that you've developed, so that's great. Yeah. So other amounts that are in that 628,000. So there's some industrial parkland or industrial land that's 72,000. The school's about 5,000. West subdivision as of year end was about 368 of this. And then those undeveloped lots are like 11.58 on Frederick Avenue. They make up about 107, and then that CPR land is about 76,000. So that's all those together make up your 628,000. So with that, then your financial assets are 1,792,000. So up a bit from the prior year by about 70,000. Liabilities are pretty straightforward for the village. The payables, as I noted, that 87,000, 30,000 of that is owed to WRC, and about 11,000 is what's owed to Standard Fire. And then there's just other general trade payables that are part of that. The deferred revenue, 24,856. This is where I'm going to get you now to go into the second financial statement. And if you go to page 18 in there, and it's note number 6. So now it gives you the detail in regards to what that balance is comprised of. So, yeah, showing that it's mainly our CRISP grant. We have about $2,936 left of it. And 1,718 is the beautification. And 5,202 is the Canada Community Building Fund. And then the ATCO is 15,000. And the 57,066, that's a WRC deferred revenue amount. Because in this financial statement is where we have the WRC 25%. So if you just ignore that 57,000 in that amount, that will give you that 24,856. So the next item then back in our regular statement where we were on the statement of financial position, long-term debt shows at 465,985. So we repaid 21,000 of that debt in the year. And we'll continue to be doing that, obviously, and paying that down. So now I'm going to get you to refer to this sheet, which was the single sheet that I handed out at the start of the meeting, which is a debt limit calculation. So this is the calculation that Municipal Affairs uses to determine your ability to borrow as well as your ability to repay debt also. So the top part of, and all of these calculations are driven by your revenue. So when you look at the debt limit, the total operating revenue is where we start. Do you have a different one? This 1 million?
Yeah,
And this?
this is just not.
No, this is the same, it's just it's not on the grid
Yeah.
paper.
Oh, okay.
That's
It's the same,
identical.
yeah. Okay, yeah.
Are you okay?
Yep.
Got what you need? Okay, sorry. So the revenue, total operating revenue that's used in the calculation is 1,135,000. And the factor that you're allowed to use in that calculation is 1.5 times. So doing that, then we're at 1.7 million as basically what Municipal Affairs is identifying as your debt limit at the top. And we've borrowed 465,000, or that's what we have outstanding currently. So our balance remaining is our 1.2 million. So it's the 1.7 less the 465,000 of debt outstanding. So technically you could borrow another 1.2 million. But as always with any debt, you need to look to how would we repay that debt and the ability to service the debt. And the second part of that calculation is shown then under the debt service section. Again, you start with total revenue, but here you multiply that by a factor of 0.25. And so then our calculation indicates that really the total debt servicing would be just under 284,000 at the 283.9. And then what we currently have for payments are our principal and interest that are shown at 45,000. So our balance remaining for payments is about 238,000. So saying if you borrowed that 1.2 million, then really based on your debt service capacity, those payments couldn't be any greater than 238,000. Asset retirement obligation. So this was a new item with 34,956. This was a new item to your balance sheet in 2023. There were new standards set by Municipal Affairs and PSAB, public sector accounting bodies, whereby they were requiring you to identify buildings or properties which you owned that may have asbestos or items such as that, materials such as that would require some reclamation work if you were to ever take that building down. And so every municipality was petitioned or needed to go forward, I guess. Petition isn't the right word, but had to go out and seek advice about how buildings reviewed to determine what buildings may be, in that situation. And here, the old library, as well as just part of the office, I think were identified that potentially you could have some materials that would require special reclamation in the event that that building was ever taken down. So the intention is that you determine or estimate what your liability is in regards to that sometime in the future, and you bring it onto your balance sheet so you're addressing it over time. And that then now over time you will start to accumulate then the liability. So when it arrives, you'll be able to cash flow it and be aware of that. So your liabilities are at 613,000, and the main change there is just the pay down on your debt and some difference in your payables and deferred revenues. So then your financial assets less your liabilities is your net financial assets. And as I've said, that's sort of what is looked at as your ability to meet current obligations. And because it's things that are liquid, which are in the financial assets, against what liabilities do you have that need to be met as obligations. In the next section, it's non-financial assets. So non-financial assets are really just referring to an asset that is not going to be consumed in the delivery of operations or services, but is an asset that you require as part of your structure within the village, right? So it's your property and your equipment. So it shows there at a value of 6.8 million. And if you just go to page 3 in this financial statement, so just flip over one there, you'll see there's a statement of changes in net financial assets. And in here, it does a brief analysis really of what changed within your non-financial assets, and that's your tangible capital assets. So it shows there that we bought some capital assets of 23,589. That was basically the columbarium that you had acquired in the year. We claimed amortization of $246,000. So that's how you're allowed to expense the non-financial assets. So you're building, you don't build a building or buy a skid steer and then expense it all the next year. You have set a tangible capital asset policy that defines how you will expense those assets. And it's basically determined over the life of the asset. And so all, infrastructure is over a longer period of time than something like a skid steer or a mower. But the amortization is representative of the expense on that you're recognizing in this year of recognizing those assets are going to be replaced at some point down the road. Then the other item here is the gain or loss on sale of tangible capital assets. You sold the recycling depot building, and the proceeds you received were the $58,667. That was net of GST. And the gain is really recognizing we had depreciated that recycle building down significantly lower, and so this was just the gain that we recognized as that $27,000. So then when you go, let's go over one more page. And that will take you to on page 5, you will see a schedule of changes in accumulated surplus. So what does a change in accumulated surplus? It's evaluating 3 different things. So the first is your unrestricted surplus, and I'm just on page 5. And so the first column on the left is your unrestricted surplus. That's basically the accumulation of your earnings since inception of really the village per se, and recognizing expenses and revenues over that time. So you can see in the year we've gone from 1.406,000 to 1,437,000. And so that's basically funds that are, or assets that are unrestricted equity, it is. The restricted surplus is really your reserve. So you'll see that $242,085 it ties to, if you go into this other financial statement and go to note 12 in here,
Okay.
page 20. So in the middle of that note 12 on page 20, you'll see that $242,085 amount. And that's the total of your reserves. And then on the left, it shows what do the reserves relate to. So fire department, large tractor, general reserve, etc. And that's the breakdown then of what this restricted surplus, is that we're showing on page 5. Then the last part of our accumulated surplus back on page 5 is in relationship to our capital assets and our tangible capital assets. And the equity in tangible capital assets is in essence the value of those assets on our statement of financial position, less any debt that's owing against them. And so you can see here that our value is showing at 6.3 million. And its change has happened. We started at 6.5, and it's just walking through again then where we bought the columbarium, so we added that into the equity of the assets. We disposed of some capital assets, we claimed amortization, and we repaid some debt. So then all of those things together, along with the change in accumulated surplus, caused the change in our equity and capital assets. And those totals, once you consider them all together, when you come back to page 1 on this financial statement, still in your small one, all of those things together make up the $8,016,000 then that is our accumulated surplus. So your accumulated surplus is made up of your unrestricted surplus, your reserves, and then the equity and capital assets that you have as well. Do you have any questions on anything on that statement of financial position? No? Good. Okay, so we'll just flip over to page 2. So the statement of operations is basically reflecting your revenues less your expenses. Now, as part of our audit process, we review everything in relationship to your budget. So we don't compare what you had last year to this year. We, in a revenue and expense situation, our concern is only in relationship, well, what did you budget for? And why we use that as the audit base is because that's either the revenue or the spending that you as a council have approved for the village to spend or to receive. And obviously it's from that you've also set your tax levy, right? So with that, there really isn't a lot of variance. You'll see, so in the budget column, we're showing $1,039,000. And in our 2024 revenue column, we're showing $1,135,000. So we're approximately about 96,000 higher than what we budgeted for. And most of that can be explained simply by when you look at the investment income line. So we budgeted $6,000, but you actually earned $49,000 in investment income in the year. And so that was $43,000 over budget. And then the other area that's higher than budget is you'll see in sale of goods and user charges, there's 397 we budgeted and 434 was actually what you recognized. And most of that is just where there were greater water sales. Your WRC water revenue was higher by that. So by about 37,000. Then on the expense side of things, we use that same concept. So you budgeted to have expenses of 973,000, and you can see our total expenses were 1,299,000. So now you have to remember what we looked at back on page 3, which was the amortization on those capital assets, that 246,000. That amount isn't budgeted for in your budget. So this difference between the 1.3 million and the 973,000, most of that is just to do with the 246,000 of amortization. So then the other area where we had differences was really mainly just in sewer repairs and maintenance. And that was over budget by about 64,000, 65,000. And it was caused by a couple things. You had a hydrant replacement that you had to look after and a water main break. And then as well, we did an installation of some services on the one lot that you sold, and we hadn't budgeted for that. So those are part of what makes up that difference. Any questions about that stuff? Yeah, so there was no concerns that arose through the audit process in relationship to your budget or your performance against that budget either. All were easily explained and justifiable. So, yeah. So now maybe we'll just look at these municipal indicators. So that's the sheet that Jen provided to you. So these are something that Municipal Affairs started to compile a number of years ago, and they're a little bit of just a benchmark for how are you doing, I guess, is what they can assist you to evaluate. So 22 is shown there, but 23, they're always on a 1-year time lag, right? Because they're done based on your audit or your information submitted in the MFR or out of the audited financial statements. So you can see here that in 2023, the audit outcome, which means do they have any concerns with the operations of the village or your financial position? And it's noting there's no concern there. Ministry intervention is no, so that would mean that a situation where that would be yes is maybe in the past year where we heard of some of the things on the news about all that went in Chestermere, and Municipal Affairs maybe appointed somebody to go in there and overseeing things. They wouldn't have gotten a no there. They would have gotten a yes. That would be an example of a
Yes.
ministry intervention. Your tax-based balance, there's no concern with that. At 51.79%, it's evaluating really the percentage of your total taxes levied and what comes from residential and farmland really out of your total base. So no concerns. And likewise on your tax collection rate, you're at 95%. That means when you're assessing taxes and what you're collecting in that first year, you're collecting 95% of them. So that's great.
Can I ask a question on that?
Absolutely.
So we've attended some meetings where that tax-based balance, some of the municipalities are trying to push up their
Yeah,
commercial
right.
tax base versus their residential.
Mm-hmm.
Am I correct in thinking this is balanced, meaning our commercial is almost equal to our?
That's right, based on this value that's shown, that's right, yeah. Yeah, because as I understand it, I don't know if you've read much on it, but that it's basically evaluating what's generated by residential, and I think it was residential, non-residential, and farmland, and then commercial is what's the other side of that, right? So in this case, yeah, most of it, you're pretty much right in the middle. Does that seem
Yeah,
reasonable to you?
I think
Eva?
so, yeah.
Yeah, so.
Is that where we want to be? It's like, because
It's a
some,
tough thing to control, right? I mean, I think municipalities are always trying to attract more commercial just because it generates a higher revenue base, right? From a tax perspective, but it's not always easy to generate or attract dependent on
we
your
don't,
location.
so I mean, the reason I ask is because we're balanced now and we are if we expand roads, we'd be either expanding residential lots or commercial lots.
Right.
So we're still having that discussion in here. Where would we invest?
Okay, right.
And so I just kind of wanted
Yeah.
some feedback because
Yeah.
it looks like we're balanced now. I don't know, maybe.
Yeah, no, I think where you're at is not a bad place, but like I say, I think villages are always motivated to attract more commercial only because it can generate a greater at a higher level of tax, right? But it's just not that easy to attract either. Is that what you find, or I think that's
Yeah,
what I hear
so
anyway.
We're sold out of lots, so.
Yeah.
Yeah, no, and your residential.
Well, and commercial.
Oh, and commercial
We don't
too,
have any
yeah.
more commercial lots, so
Oh,
we have to,
yeah, you're in a good spot.
well, yeah. but
Yeah.
We're in a spot where we have to decide how to
Yeah.
allocate capital for expanding.
Yeah, I see what you're saying. So
So
do you
that's
put
like-
it to commercial or do you
Yeah.
put it to residential,
So-
you're saying?
So which is like residential recently sold, so it's kind of like you feed the birds while they're chirping, right?
Yeah,
But residential projects or industrial's been there for a while. So you know, I don't
No,
know. So
I
how
know.
do you weigh these things giving limited capital?
yeah, that's a great question. I'm just not sure. I guess you would have to evaluate it over what tax base can you generate out of developing those lots against in each sector.
Well, I
Right,
think
so
the key would
and
be
the
we got-
cost to develop them is the other thing, like, sorry.
Well, that's what, no,
Yes.
it's
I would
pretty,
think the cost is much greater on residential to develop than a commercial lot, is that
I
correct?
think that's what you're gonna say.
well, it's realistically, you know, villages, municipalities shouldn't really be the developer. in
No.
anything, right?
Yes,
So
we
we
learned
should
that
not have
already,
ever developed what's there now, glad
No.
it is, but, and
yeah,
we shouldn't have been developing the industrial. We should be trying to find somebody that's willing to come in and
Yes.
spend their money to develop it, so we're not the ones going in debt.
yeah,
And
Which
there'll
is
be
the
another
key.
400,000 or whatever. we're still
485,
paying
we have
for.
left when the
So-
lots are sold,
so
right,
if-
yeah,
If a guy could get a developer in, that would,
and that's the ideal,
So
Right,
on
yeah.
that note, the staff put together some work on a couple of different projects where we would be using grant money we haven't spent,
okay, yeah,
this year's grant money and forward grant money.
yeah,
So what we're looking at is in the next phases of development, essentially roads and a bit of dirt work,
yeah,
where we wouldn't be borrowing, but we would be pre-spending up to 2039 or 37. Do you remember?
2027 was the project we did,
2027.
so like a 5 year.
So we'd be
Or
be
2-3
spending
year,
the
yeah.
next couple of years of grant money. So
okay,
can you, in my point of view, pre-spending some grant money to build lots that we could sell,
yeah,
I feel like that would be
doesn't sound like a bad thing at all, right?
right, because we
Yeah.
wouldn't be borrowing.
No.
yeah.
That's right,
Then we spend the grant money, and then until 2027,
yeah,
the lots we sold would be coming in as revenue.
that's right,
So
yeah.
that's not a bad.
No, no, exactly. I guess the other side of it, or what you have to consider, is just that then using those funds towards that won't leave excess grant funds for other maintenance
Or
or
other
those
things.
types of things, right?
Yeah.
You know,
Yes.
it's a little bit of that balance
a little
about
bit of
something
risk.
always blows up or
Mhm.
something.
Well,
It's
that,
probably maybe trying to get somewhere in the middle maybe on it.
Yeah, because that
You know?
project, I think, was for both road projects, right?
For the extension of Frederick Avenue and industrial.
Yeah, so we could, to alleviate that risk of forward spending, which then would preclude funding for other maintenance projects.
Yeah,
I mean, really, we could look at a project where we stagger that over a couple of years.
yeah, which is often the way you've undertaken things. I mean, you've sort of done it in phases.
Yeah,
I think historically, is how you approach them because they are such high dollar projects. So by doing it in a phase of phases, then it allows you to spread that out. And then as well, be in a position where you don't have all your eggs in one basket, right? Something goes sideways, unless phase two, you're halfway to nowhere with phase two and
Yeah,
it's really.
yeah, well, and we have some infrastructure, old infrastructure, right, so we don't want to get too carried away going,
Yeah,
forward
infrastructure
and
age,
have-
and I didn't look that up.
yeah,
Yeah, that is like here, your infrastructure age is 65.31%. Yeah, and it's the infrastructure age is really just the net book value of your capital assets
okay.
as a percentage of the total original cost.
Oh, so it
Yeah,
hasn't been
so
totally depreciated yet.
No, municipal affairs is concerned is if the value is less than 40%, and you're well above that. Yeah, just in the last.
Okay, that's the
bullet at the top.
last center.
Yeah, that last one at the bottom says
In the-
65.31, and the last written bullet point at the top
Yeah,
is about the infrastructure age.
oh, at 40%.
Yeah,
Okay.
So which should indicate you're in pretty good shape that way. Yeah.
We have a couple pieces that need to be replaced.
Yeah.
Or,
Infrastructure, you mean?
well, we've
Yeah.
got the Broadway, for instance, we've had 2 line breaks on it in,
Was
so
it the one
it was one of
this
the.
year? Or-
No,
No.
well, yeah, it was last year,
Yeah.
one of them. One of them was before that. But I mean, they were all done at the same time, so there's,
Yeah.
3 or 4 left, so
No.
it's kind of a risk you're taking, right?
It's a gamble, yeah.
And you're
Yeah.
not replacing it,
No, for sure.
so
Yeah.
it's, yeah.
Do other municipalities spend money on cameras to go do detailed evaluation? So,
Oh,
so we could do a better idea of what's really risk and what's not.
I can't answer and
We
speak
do
to
that.
that.
We do.
Yeah,
Yeah.
I would think that would make sense. Because it'll tell you
Mhm.
then where you're at, right? Or
Yeah.
give you a better idea.
Yeah.
Yeah.
We had it done in 2011 and 2018.
Oh, okay.
Yeah. 18 was the last one.
Yeah.
2011 to 18, so 7 years.
And then,
Oh,
We should be doing it again.
we might.
yeah, I was gonna say you're probably
too,
right there again.
Mhm.
then.
because that could help us decide allocating of capital.
Mhm.
Or grant money.
Yeah,
Anyway,
for sure.
Thank you for that.
Yeah, no, you're welcome, for sure. Yeah, and those are really the main, like I say, there's other accumulated surplus, you're at 1.6, that's a good indicator, you don't have any issues. And if this were in color, you would see these are all green, which means there's no concerns anywhere.
Right.
Yeah, so when you print this or go onto Municipal Affairs website to access it, there actually will be some in red, like if the indicator is not good. But yours are all in green, which means no concerns in any area.
What's the interest in municipal office? Not applicable. What's that?
What's that?
The very corner one, interest in municipal office.
Oh, yeah, I don't know.
Oh, so is any,
Yeah,
I don't know.
I could check that out. Send you an email.
It's not interest.
I have that sheet printed. to bring
There's
you.
no interest in this.
No, no, no.
No, I don't think that's what it means. Yeah, I'll actually provide to you, there's an interpretation sheet, and I
Oh.
printed it this morning, I was gonna bring it, I thought, oh no, we never get into that much detail in these, so, yeah, but I'll send it to you,
Okay.
Yvette. Okay. Okay, so now let's go into this statement. Is there any other questions out of just the village statement or financial statement at all? So this main statement, the consolidated financial statement. So if you just turn over the first page there, you'll see, let's go to the second page, there's an independent auditor's report issues. So that's indicating it's on page 2 and 3. So it's the report that we issue indicating that we have no concerns. We've completed our audit process, and through completion of that audit process, there's nothing in these statements that leads us to believe that they would be material misleading or that there would be a material misstatement within in the financial statements. And a material misstatement would be something that if a reader used the statement and relied on them, and it was out by a material amount, it would lead that reader to an incorrect conclusion on an interpretation of it. Yeah. So the statement of financial position, in essence, now you'll see obviously different because it brings in 25% of WRC. So these are done on a percentage of consolidation. That's the consolidation method is a percentage method, and because we own a 25% interest in WRC, then we basically take their statement of financial position and bring in 25% of that. And then anything that is, for lack of a better term, intercompany. So if WRC, we owe WRC money, then they show that as a receivable and we show that as a payable. In these financial statements, that gets washed out, right? So anything that's an asset on their side and a liability on our side, when you put them together, they're gone. So with that, I'll just kind of touch on the total. The total asset value now is 2,060,000 here. And that's really mainly in relationship to just bringing in the cash of WRC, or our percentage of that cash. Lots of things don't even change, like the other financial assets or the land inventory held for resale. Obviously, WRC doesn't have any of those things, so these are just our amounts. On the liability side, we're at 750,000, so we bring in some more long-term debt. And then there's a shareholder loan amount that's owed to the other members of WRC. So that brings up our liabilities a bit. And then the net financial asset overall, though, value here is 1.3 million, where in our financial statement, just with the village, and I think we're at 1.1 there. Yeah. The tangible capital assets are 9.8 million. So there's $3 million worth of assets have come into this consolidated statement. And then our accumulated surplus is 11.1 million. So likewise, the 3 million of assets we really haven't brought much debt. So that's our accumulated surplus goes up by an equal amount as well. Then when you look on your consolidated statement of operations, which is your revenue and expenses shown there on page 5, so we don't audit their budget and we don't include their budget. So the budget amounts here are really predominantly just the village's standards. So now, though, we are showing 1.2 million of revenue, where previously we had 1.1, expenses are 1.4 million, where we were 1.3 million in our village one. And they didn't really have anything in tangible capital assets in the year. If you go to page 6, so you'll see that addition in that middle column, the acquisition of tangible capital assets, that's just the columbarium again. So where the difference is our 329,000 of amortization. So they do the same thing with their capital assets in that they depreciate them over time or expense them over time. So where we were 246,000 in amortization, now it's 330, right? So brought in another 90,000 there. But no sale of assets on their side, because this is really the recycle depot is what's shown here. Yeah, so then on page 8, showing there your changes in accumulated surplus. So same layout, unrestricted surplus was first, then restricted or reserved, which again, WRC has no reserve. So that's middle column is really just for village. And then our equity and capital assets is now at 9.3 million. So an increase from what we were showing independently in the village. Page 9 is just a further breakdown of capital assets. So across the top is each category: land improvements, buildings, engineering structures, machinery and equipment, and vehicles. So the engineered structures would be if you have a break in your water line or something like that. That's where those costs are going to come through. In the current year, ours was all in buildings because we added the columbarium and sold the bottle depot or the recycling depot building. So it just gives you additional breakdown and where the amortization is allocated amongst each of those categories. Page 10 of the financial statement is a breakdown of your property taxes and the revenue that you generate in your property taxes, net of your requisitions paid. So you collected 613,000 of property tax revenue, and your requisitions that you had to pay out were 136,000. So your net municipal property tax is 476,000, and that's the number that flows into our net statement of operations. Page 11 is just transfers. So these are the municipal or the provincial government transfers we talked about. So when you're speaking about grants that you would be spending in the future, those would be those that would be of capital nature. And then the operating are just the ones you receive every year without application or any project allocations required. The other two segments of the financial statement just really break down your expenses and revenues in a different manner and format. So page 12 is the schedule of consolidated expenses by object, and object is shown on the left by contracted services, salaries, materials, and amortization. So it just gives you a little bit different breakdown on those things. And then on page 13 is just segmented disclosure. And again, when you run across the top, it's more by department, right? So now general government is the first, protective services, transportation services, planning and development, recreation and culture, and then environmental. And all coming back with the same totals overall. I don't think there's anything, the note do provide additional information to many items within the financial statement. So on page 17, note 2 reflects that there's 229,000 is the cash that came out of WRC that we're including in here. And then the other notes just flow through and are all detailed in that same manner. Are there any questions out of any of that stuff? So then the only other item is just a management letter. I hope it's in your package, and it's in my package.
I didn't see one.
I wondered
I
if
didn't
you
either.
included it. Okay, well, I know what's on it, so I'll
Okay.
just tell you.
Yeah.
I think I can remember it all.
So we just need to go into closed session.
Yes, you do. That's right. Yes, thank you.
Closed session sections, you know what the sections
Oh, sorry.
for legal. I don't remember the section number for legal.
She wouldn't have stapled it in anywhere.
I don't think so. No, it was funny because when I handed the note, I thought, no, I don't think there's one in here. Oh, it's in here. They told me. You want me to get a agenda full of copies? No, I'll just tell you what it is. Okay.
We're just looking up the section, so we
Sure.
can make a motion and it's.
Yeah, that's all good. No worries.
Testing, tests and audits. That would be section 26.
Section 26.
So moved by at
Oh,
the time
sure.
to close session under FOIP Division 2 exceptions to disclose section 20.
All in favor? Carried.
come in and disrupt your daily activity.
No,
That's all good.
all right,
So
so.
part
we
of the
take a-
process.
Yeah.
We need a motion. to accept.
Yeah, so, yes, we'll do that right away. Are we approving consolidated?
Yeah,
Audit?
that
Okay,
is because
all right,
that's
consolidated.
That's what
All
we
right.
issued the audit report.
That's what I
on.
did put in here
Yeah.
to accept the 2024 consolidated audited financial reports as presented. So.
I'll move that.
Make that.
All in favor? Carried.
Yeah, because we forgot one here.
did too.
I think it was last time.
No, 22.
Okay.
But who's counting?
I only saw it because I was looking up something else and saw it. I'll give you a few of these because then you'll sign.
Yeah, we have to send.
And then I'll give you. Do you want? You can
I
just sit
come over
here.
there.
Yeah, you can sit here.
No, I don't need to sit.
Yeah, no, go ahead.
Okay, so this one's for me.
Yeah.
That's why I brought it up, that we forgot to make a motion, so we didn't get talking about.
Good.
Yeah, that's
Other
what happened
stuff
last
and
time.
got
We were doing this
sidetracked.
and we forgot to do it afterwards.
Yeah, you carry on.
Oh,
now.
okay,
So that's
carry on.
That's financial information.
Okay, do you want me to sign?
Yeah, you
Just
can
print
just
it, sign
sign
it?
that and date it.
It's, today. 25. Okay. Just initial here.
No, you can sign there.
Okay. And they're gonna be the same signature. And
So these are just reclassifying entries.
okay.
Yeah. And these are the journal entries. If you have any point, I think you probably, Jenna sent those to you earlier, right? So if you,
I did see some.
yeah.
Just wanted to. Okay, this one is both of us.
Let me see who this is addressed to. Yeah, so each, either two council members or yourself and the mayor.
We'll just do it this way.
Okay.
See. Oh.
And then this is to mayor and members of council, so I probably just have Martin and then one other
Okay.
council member sign that one. Yeah.
To Larry. And this is again to
Mayor,
members of
yeah,
council.
they-
Okay,
Yeah.
so you guys sign these ones. All right.
Excellent.
I'm good over here.
And this is the package of stuff.
Oh, awesome. Thank you.
Okay.
I think we discussed how we usually have our audit at the end of January, but because of WRC's audit, we'll be doing it at the same time next year around March.
But if that doesn't work for you, I mean, we
No,
can.
that's works for us.
Yeah.
Yep.
It just ended up, what we were doing was that was great that she would be ready early and we love doing it early. But then it ends up WRC wasn't ready. And so we were basically doing your audit and then putting it aside and waiting for the WRC audit to be done. And then we'd go back to it almost like a month later. And it just wasn't very efficient.
No.
So now we ended up that we pushed our field work back so that then we're more in line with what they're doing. Yeah. So but like I say, if we're happy to change it around if that doesn't work for you.
That works for us.
Yeah, you're okay
Yeah,
with
that
that.
was good either way, so.
Yeah, okay. Thanks for good to see you again.
You too. Take
See
care.
ya.
Okay, take
Thank
care.
you.
Thanks a lot.
But Dawn is still coming.
Yeah, he will. I just told him to show up whenever and we'll slot him in. So I
Okay.
have everything for him on the side here. So unless did you want to look at his letter right away?
No, let's just keep going and get some of this
Okay.
done instead of waiting,
Okay.
because we'll go over it again with him anyways, so.
Yeah.
Public Works and Office Report.
Okay. I'll just. Alright, so, um. James's report. So they were just doing quite a bit of cleanup in the ditches and stuff with all the garbage right now. So potholes have been filled in the industrial park. So we brought in a load of the crushed asphalt, and we've been doing that. It worked out really well. West end of Christian Avenue with the new tractor, he was able to grade it up. He graded up the cemetery road with the tractor. He said it works really well. And getting equipment ready for the summer for mowing. All the culverts were unplugged with the steamer. Snow removal, yeah, that's all finished now. So that's good for public works. Again, office was busy right after last council meeting. We had a huge online conversion with the GL, which is why I couldn't print out the receipts report. It wasn't correct, so there was no point in providing it to you. The numbers are all right. The consolidated report is correct, but the rest of it wasn't. So I have to work on that, and it might take a bit because it's quite complex. We did our camp spot training and we're now live. So we already had some people use it. So it's very user friendly. We had another presentation on solar. So now we have basically 3 different groups presented. We had a meeting with 8760 regarding the power and solar, which was very interesting. We'll come back to that later. Assessments have now been loaded and they're ready to test. So again, we'll talk about this when the budget comes up with assessments. And again, just preparing, getting the final numbers into the auditor for presentation tonight. We also met with Strathmore now regarding advertising and websites. So again, we'll talk about that when budget comes up. That's about it. Other than it's been pretty busy again. So. Yeah.
Somebody want to move to accept his information? Larry, all in favor? Carried. Strategic and AM.
This is where you want to start, right?
Solar.
So yes, so strategic, I'll talk primarily about the solar. AM asset management, I'll touch that first. Mostly what's been done is just updating the spreadsheets that organize the various assets and what they're related to: roads, water, sewer, parks, etc. And the 10-year plan we have with that, and the money or the budget money set aside for it, and aligning it with how the budget is laid out, and incorporating notes into the budget that demonstrate this expense is an asset management, this expense is an asset management. So it's easy to follow and everything's cross-referenced. So that way all the budgets hereafter are easier to put all the strategic, the asset management, the capital, and the operating are more manageable and they all interact with each other. So that's what asset management's been up to. I have an update on solar. Here, pass them down. That I've written out. It's a front and back document. I have it up here on the screen too. So I thought it would be worth noting the things that we've learned. So our actions that we've taken so far, like Yvette said, we have 3 installers that we have price quotes and rough site plans from: Teralta, who are based in Medicine Hat; Dandelion Renewables, who are based in Edmonton; and then West Can Power Sources, who are based in Calgary. It was they've all been very interesting. They have some distinct differences, so it's been interesting. So we learned about the solar club. Once the solar system is online, you join a solar club. The solar club is basically they're the retailers that run for solar and ensure that you get the amount per kilowatt hour. And solar club rates are 30 cents per kilowatt during peak periods. And you only get that rate, or you can join the solar club if you're 150 kilowatt hours or less in your solar system. If you're a bigger system than that, then you're locked in at what you're paying at your current rate. And I have those rates there. The 8 cents is approximate. I didn't go through the math to make sure we were. But so the short of it is that we want to have a solar system that produces 150 kilowatts, or that is 150 kilowatts or less, because then we take advantage of the solar club benefits. The FCM grant that had to be redone was redone, and it was successfully submitted. It is now in phase 5 of a 6-phase approval. We won't hear back until midsummer to end of summer on that one. I found a new grant. It's the Municipal Electricity Generation Program. I found that one today. There is no deadline because it's got funds available until the end of 2026. So it will cover 30% of the cost of a solar system. So I'm going to look into applying for that. We learned that including the Broadway Group building into our solar project is not feasible. The amount of energy that they use is almost double of what our whole project is. It doubles the cost, doubles the size. It won't fit on the arena. You'd have to make a massive project, and yeah, it's just not feasible. So we have to drop.
Their whole roof
Their
would
store.
require solar panels.
Yeah, we did.
Their
And
whole roof.
there's in this document here, I didn't make a photocopy of it for you because it's so many pages, but in this document, you'll see that TerraAlta provided a quick sketch of what it would look like to have the Broadway Group building with solar, and the entire store building roof is covered, in addition to the arena being covered. It's just too much. So not feasible. We learned that the street lights are not permitted into a solar system. That's a Fortis thing. And for us, the street lights is about $2,400 a month. So then we also learned that a ground mount system, if we were to use that as a building system, it would be south of the walking path. It would tie into the SO building, but the transformer and the general electrical infrastructure there is not suitable for it. So it all have to be upgraded to make it work. And the arena was already inspected by TerraAlta, but the engineer would still need to be would be required for a building permit. But the roof looks good, and the electrical infrastructure all at the arena is already suitable to carry the usage of the whole system. Just a reminder that our $15,000 grant by APCO needs to be used by 2026. And Yvette and I brainstormed 4 ways we could pay for the solar, since we're looking at possibly not using the FCM grant for it because of the time frame. So the second page is the quotes. So you should know the Dandelion Renewables and the West Can Power, those quotes are calculated by me according to the price per watt that they offered, because they both recommended large ground mount systems that covered the entire village. And so their systems were massive, huge, and very expensive. So I calculated, according to their percents and their information, what it would look like if it was just the village buildings. And so that's where it goes. That's why I have asterisks next to those numbers there. And then the second half is the ground mount estimates. And you can see that there's a huge difference. And I talked with them, all 3 of them, to find out why there's such a massive difference between them. And it just comes down to different philosophies on approaching how to provide the system and what the system should be, and where they get their materials. Dandelion gets theirs from Europe, and TerraAlta gets theirs Canada and Asia. West Can is a mix of North America, a lot of it from the States. So, and then, and how big the system was. TerraAlta did not recommend doing a ground mount system that was large because you can't take advantage of the solar plug. So I don't have an estimate from them for that. Dandelion and West Can both wanted huge systems. I think that West Can was leaning towards, I can't speak for him. He didn't say retailer, but it certainly has it's so large, it was confusing to me. Okay, so then here, do you want me to pause this?
Yes, please.
Sure.
Okay, so let me, here, because I didn't know where Dawn is, but Dawn is actually being replaced by Barry. Um, so there and there. So this was what Dawn had dropped off. It's just a letter. So we have a quote here. I'll let you speak to the quote.
We had asked a number of times to have the caveat put on for that, recycle shed, of course, and then, no follow-up was done on that, and then I guess Don was talking to, I don't know who it was, I think maybe you might have been talking to your mayor, and it said that probably the village would cover costs of, transferring the power over for us from the recycle shed.
He did not talk to me about that, and I would not have said that, so,
That doesn't sound like you.
no. That is a decision that's made in this room as a group, so he didn't talk to me.
I don't know who you said he was talking to. Anyhow, an estimate has come in to have it done where we go from the transformer by the old hall.
Mhm.
And it goes straight down to the south to the power pole there, and then connecting to this feeder shed. Right there.
Correct.
Yeah, and an estimate has come up with, for this estimate is 5,500, and the volunteers to do the job would be 1,200, so a total of $6,700. And we're asking the village to approve, and for that service to be transferred over. And in a letter here, I should say that Don maybe should have mentioned the fact that those costs could be either plus or minus what we've got as an estimate, because when it finally gets done, who knows?
So can I ask you a question? Why are we paying for volunteers? Or why are we?
That's material.
Okay, then it should have said material, so we understand, not labor, right? Any other questions? Any discussion? Any opinions?
So you're asking for the 6,700 is what you're asking for.
Yeah.
Okay.
We'll say plus or minus, because we don't know until the actual, numbers come in, but that was just from the quotes that were given, so.
And village council will need to approve the work anyway.
Mhm.
So
I have no problem doing this, but that's my feeling. We never should have put it in the building to begin with. It should have been done right off the start. So, right?
Correct.
The reason we wouldn't put a caveat on it is because then you cannot sell it.
Yeah.
and
So, and we couldn't put a caveat on it anyway, but it wouldn't allow it, so. Any other questions or conversation?
I think we should go for it.
You wanna make the motion?
I'll move that we. How do you want me to say this?
Move the power,
We'll move to pay the 6,700.
leave it up to, don't say 67 because of the fact that if it comes in under,
Okay,
if it comes in at 5,500, then we're not obligated to give them.
the village will cover the costs.
There you go. Any other conversation or questions? All in favor? Carried.
Thank you.
Done deal.
Thanks.
Yep.
Yeah.
It's already worth your time.
Let's go walk.
Thanks for coming in, guys.
See you guys. Regular minutes.
I'm gonna finish my,
Oh, sorry, I got sidetracked, yes.
that's okay. I forgive you. All right, so this is the short version of Terralta's proposal, just to remind you. There's their rooftop system that they will cover 100% of the usage of all the site IDs that were there. And this is renewed, it's as of March 25th this year. And I have the whole thing on the drive, so you can take a look at it further. This shows their peak hours of production of solar, and so the difference between the yellow and the blue is where we would be earning credit, right, at that 30 cents in the solar club. Then we earn that money, it goes into our account. We don't see it as cash, it pays ahead as a credit. So then if there's ever a difference, then the credit covers the cost, covers the bill. And that's why we don't have an electricity bill. There are, he said, 14 or 18 realtors in the solar club, and there are a handful that will give you the actual cash back after a certain period of time if you're producing excess. So
Can you go up? There's a value associated with
on this page
up,
or up
one
a page?
up at the very bottom in green, estimated carbon credit value.
Yeah, that's
Where did
this
they get that
carbon.
number?
It's calculated. I'm not exactly sure, and it's if we get a carbon credit return, that might change.
Yeah,
so that's not
they
a
don't use
physical
that
dollar.
in any
No.
in anything, right? Because that's imaginary.
No, it's just a point of reference. It's not something we'll actually see. I think when they did this, anyway, here's the Dandelion renewables. So you can see that their system is bigger. And there's what they propose to build on the arena. So they didn't give me a copy of their model, but they showed it to us in our review. They had the system all the way up to here. And then they said it would only cover 87.5%. So I talked with them and I talked with Terralta to understand why such a huge difference. And I think it was really just their approach to the modeling and the equipment they use. And then this is their total cost. And then the ground mount system. Now this right here, this 50,000 is an estimate. And Terralta told me that Fortis would typically not ask for that money up front. They would charge it to you over time. But I put it in there, and then fence and contracting and etc. for a ground mount system, and that's what they gave us back. And then here is from WestCan. It was an email, so you can see his kilowatt calculation. So here's the other interesting thing. So Terralta, we signed some forms. They did all this legwork and found the information, the site IDs, all this kind of stuff, gave it back to me. Dandelion Renewables needed me to do all the legwork for them. Luckily, I had a lot of it, and the same with WestCan. But then WestCan came back with a consumption that was even more than what Dandelion Renewables came with. So I'm not sure where his consumption number came from. So he was recommending that you have to spread out the system because you want to take advantage of Solar Club over many buildings in little systems, and that each building would require a structural review. And so the cost of this project just escalated because of the way he would go about doing it. And then he went with, he didn't offer anything different than what standard residential per watt is, which I looked up. So his system is like huge. So
back in 2016 or 17, we did get a similar quote from WestCan. I don't recall it that well, sorry, but I did find the quotes. So again, the same thing, it was multiple
Smaller things.
applications on each rooftop versus one system on the arena.
Well, what these guys are battling is, so you would look at it from a cost up and right now, but then on the back end, if you build a small system, it doesn't cover your cost.
No.
And it's a guess, right? Because some years it might, some years it won't. Depends on typically it depends on fog. If we get lots of fog in the fall,
Yeah.
you won't you won't cover your cost. So some companies build a bigger system to avoid being upset at the end. Some people do a smaller system because they might not care so much how you feel about it after it's done.
All of the systems do have the potential to produce over 100%. So, well, no, that's not true. Dandelion Renewable said only 87.5%. Terralta said that the system that they can build would probably produce 114 to 120% of what we're actually using. And then Westcan was looking to produce like a 500 system. So he says it would cover everything, but he didn't make note of how we couldn't use the streetlights and stuff. So I wasn't really sure where this information was.
And in their model,
gap.
they show the degradation of the panel production over time. Because of course, for year one they produce great, and then it deteriorates forever.
So only
make power.
Only Dandelion and Terralta touched on that.
Okay.
And they both talked about the warranties of their products. Dandelion goes with this German-made product; they swear by it, and then that they're maybe Westcan did a little bit too. But they talked about the warranties and the ease of getting parts to replace, and they all take care of that. Dandelion and Terralta monitor as part of signing on with them. They monitor forever. Dandelion has an agreement that you sign to ensure that they come down and they do the maintenance work. I think you get 3 years or 5 years automatically, and then after that you sign maintenance agreements with them. Terralta, it's just part of their business, and they warranty all the stuff. So the next page here is because if council wants to move forward and do this with more localized grants to no grants, Yvette and I put together the numbers of what it would look like and created a proposal of how it could be paid for so that we could get it in sooner and not lose our ACO grant. I don't know what the consequence is if we don't use it by next year. And then the groups don't lose more time. So the proposals show. Sorry. That's why I have this one, so I can use this one. So the proposal is using the Terralta. That's, if I gave a recommendation, it would be to work with them. They have been my source of information and education, and they demonstrated professionalism, and I haven't had to do all the legwork like the other two. So I use their number. So there's a possibility of grants coming in, and then the APCO grant. Proposal 4 is without an infrastructure grant, a local infrastructure grant. So we went and thought, well, if every group contributed what they pay for power now, how long would it take to pay it off? So the first one is if total power was broken up in the percent that they would pay. And then proposal 2 kind of equalizes that percent a little bit. And then proposal 3 is exactly what they pay in their power. These numbers, ours is an exact number, the arena is an exact number, the seniors, I couldn't get a hold of the power bill from them, so that's an estimate. Curling is exact, hall is an estimate. They provide me a couple of bills, so I just kind of averaged it. The library is from their budget that they provided. And then proposal 4 is if they took 2 years and we had no extra infrastructure grant to cover it. and that's how it would look. So you can see that if the groups are willing to agree to a payment plan / schedule, then we could accomplish affordably. We wouldn't pay anything different than what we currently pay in our electrical bills.
So could we, have a meeting with all of these and groups?
Yeah, that's so Yvette and I were hoping we'd get a motion to move ahead and meet and see what, because we know that the groups are excited about it. I used all their emails in the grant applications. They definitely want to move forward.
Yeah, but, okay, but we have to have, I mean, I think they should sit down here and look at these.
Yeah, for sure.
That's what we want.
Well, and the thing is the next step, should we have a motion to accept to sign a purchase agreement with the company and move forward, we have to have the power aggregated into us. So after these groups agree to, let's say, a payment schedule or something, like one of these proposals, then we have to get agreements that they will pay us the cost of their power, because it'll all be under the village. It has to be under one retailer and one account. So that would be the next step. And so a meeting has to happen in order for
To make that
decisions to be made and then agreements to be made.
Yeah, they'll be paying that in lieu of their current.
Because if we sit here and wait for, like, I mean, we won't know about any grants, and possibly we can apply grants to this if we get them. But if, like, I mean, the arena, the way the insurance is going, they won't be able to stay open.
So
It's getting
you-
costly.
You want a motion that you would meet and discuss this and then
Yes.
come back here?
Yeah.
So you wanna make that motion?
I'll make that motion to direct council to,
Direct staff.
or sorry, direct staff to meet with the chair
Nonprofit groups.
for the nonprofit groups
Yeah.
for,
Yeah, solar.
for the point of discussing the solar proposal.
Any other conversation on that motion? All in favor? Carried. Opposed?
You handed it. No, it didn't. I'm not opposed to this motion. I'm meant to vote for it.
Okay.
Okay. I went carried and went like, oh, Mike's hand didn't go up.
Yeah.
Everybody has to vote, so I know that, yeah, we just have to make sure we've got.
Okay,
It was good, and then when I didn't, then it happened, I was like,
so you're
Okay.
good now, so we
Yeah.
can move, somebody wanna move to accept 4.2,
I'll move to accept 4.1.
all in favor?
I saw his hand go.
Carried. Regular minutes for March 12th. Anything noted in that?
Just to give you some information, what I'm going to do from now on, as soon as the minutes are done and approved, they will go on the drive. So within a week, you guys can go check the minutes, because it's easier to do when it's fresh in your mind from the meeting.
Yeah.
So like usually Jen has them done really quick. I can prove it.
Okay.
And then we'll put it on the drive, and I'll maybe just send you a text. Okay, minutes are there. Go, you can go
Okay.
read them.
Perfect.
If there is anything wrong, then maybe just send me back a note saying, oh, this is
Okay.
incorrect or something, because a month later is sometimes a
Yeah,
little
it
bit
is
too
tough to
long.
remember.
Yeah. So,
Move to adopt minutes.
All in favor? Carried. 6.0 lot sales update.
okay, so we're just still at the same phase. And again, I got signs ordered and coming in. So the placards, so it's just information.
Move to accept 6.1 as information.
All in favor? Carried. Project 2025, phase 1 and 2.
So if we can just leave this until the budget area that we work in, so we'll just
Table it.
hold this until we
Table?
get into budget discussions.
Sure.
Okay, and then also the project for industrial, we'll,
Okay.
kind of hold it off until we
Okay.
talk about budget.
Just remind me.
Yeah.
Library bylaw.
Okay, so we did send out a letter, well, hang on, I missed something here. Okay. Sorry. Because we did follow up on the library, in discussion with the insurance. That water line break, there was no way that any insurance would have covered it. It's wear and tear. So we just wanted to confirm that.
Well, it said it right in that letter,
Yeah,
that the email, that it's not gonna cover rust and corrosion
yeah.
or, so.
It would only cover an earthquake or natural disaster
Yeah.
or something like that.
And again, the bylaw, that is in place, that has been there since '89, is that they are responsible for the maintenance of the building. So again, we're back to the same, we have not received anything from the library, from the last meeting.
But we did, can I say
Oh,
what
yeah.
I learned from the Municipal Act and the Library Act?
Yeah.
So we did research into those things, and we did learn that there's some things that we're not doing properly with the library, which is that they are supposed to, in the Library Act, they're supposed to give us financial statements at the end of the year so that we can see how money was spent and then their budget. And also, they are supposed to, in their budget, they're supposed to plan for what they need, not just what they'll get to, right? So if they need capital improvements, it's supposed to be in their budget. And then in the Libraries Act, they are supposed to come to council with a letter or a presentation asking for money to help make their budget meet ends. And so I think that that's one of the gaps in
Well, they-
understanding.
Yeah, they did do that. I mean, that's the meeting they had here. right?
Well,
Well, not really.
that's, so the
That
way it's
meeting was
supposed
Yeah,
to,
regular.
yeah, the way it's supposed to happen is that their budget, because they're managers of the building, and like you pointed about asset management, et cetera, right? Because they're managers of the building, they can't own property and all that, just like they were saying, right? They are supposed to plan the maintenance and care of the building, so there should be a budget line for it. And in their budget, there isn't one. So they should have a budget line with an amount in there and then come to us by December and say, here's our budget. We also are asking for $5,000 to put into our capital project reserves or whatever it is, and this is how we plan to use it or save it. And then we say yes or no to their request. We don't approve a whole budget. We just listen to the request and council says yes or no to the request. In the Municipal Government Act, it gives permission for council, because libraries can't acquire debt, they can't get loans or anything. So we can't even give them a loan to pay off that water break. That's not okay. So either we pay for it or they pay for it. We can't give them a short loan. So in the Municipal Government Act, there's a section there that we can use in our budget, the community services, GL, set aside money for requests by groups such as libraries to help make their budget ends meet. So the way it's pretty clear. It's nice. When I say clear, I mean like it's nice and linear. They run their budget, they manage the building, they come at the end of the year, they're like, we need 15,000 to make up the difference for what our library produces. We say yes or no, or we'll get back to you. We do our budget for the next year. We got 5,000 that's planned for that community services. And we say to them, we can't give you 15,000, we can give you 5,000. And then they get that money. And then whatever comes up in the year, that money is theirs to manage. No strings attached. It's their money that we contributed to their budget.
But that money, sorry, Mike,
Go ahead.
that money, that line item
Mhm.
wouldn't only strictly be for library though.
There was a handful of things. I'd have to pull up the MGA to read what it was. I just noticed like, oh, this is how libraries get funded by the municipal government, is through this community services.
That's one way, right? But like, it used to work the other way. Like this town, we used to give them a check for like, what was it, $7,000 every year.
No, I don't think, well, about 5, I think.
Well, I think one was 7, and one was 5.
It went up and down, right?
Yeah.
4,500, I recall, and then we went down to 15.
Yeah.
100.
So there was maybe only 1 year at 7,000. So I mean, at some point we defunded them, or they stopped asking,
So
whatever, right? So the reality is we have to pay this bill, and then we have to agree with them how we're going to fund them. Like they don't. We need to fund their capital budget. Like this is the only way.
I'm not against doing that, but I do have an issue paying this bill. Because since 1989, it's been in the bylaw, and it has never been questioned before until now.
I do want to make a point of information for your discussion.
Go ahead.
So when I was the board chair and in the board for a long time. And what we did, one of my aha moments in this research was what we were doing was exactly what the Libraries Act laid out. The person who sat on was our council rep would say, oh, just write a letter and ask for this money. And he always said that around November-ish. And so we did, we'd write a letter and we'd ask for whatever we thought we needed to make up the difference in our budget. And he was like, oh, council will get it. And then by the next year, we would get a check from council. So we were doing exactly what the Libraries Act said without realizing, maybe he knew, but I as chair and on the board didn't realize that that's what the Libraries Act was about. That practice is what got lost. And so then now it became, as something comes up as a need, now we go to the village and say, we need this, you're not funding us. And we go back and think, well, we gave you like $90,000 over 10 years. What are you not doing with it? So, and then we get into this conundrum. So the practice of writing the letter at the end of the year saying, this is what we request is the procedure that the Libraries Act and the NGA come to.
So
I just wanted to put that into the discussion.
Does it specifically talk about operating or capital? Like,
It doesn't specify, to my recollection, it doesn't specify.
Well, what I would like to see happen is I would like to see 2 board members, not 6, come sit here and discuss it with us about their budget, like you said, so we can have a discussion. Right? Bring your budget, come and talk to us. And
Yes.
we'll figure it out. Right?
Yes.
Yeah, I mean, I think what we could do in there, if someone's going to make this motion, is then we request, show them, give them a reference to the act,
Mhm.
and that we want to see an asset management plan, and then their annual capital ask, what it would be. And they already know what it used to be. So and that was the discussion last time. We got to figure out what you've spent, create the asset management, and then create the ask.
Well, and maybe too, I mean, maybe there needs to be more fundraising done, right? If they're struggling, I mean, I know it's tough, but I mean, volunteers run these organizations and have for years. And when they were always go to the fire department arena, when they were short money, what did they do? You played hockey here.
We raised money, but the thing is,
money.
but we can't, I mean, in this particular meeting, we can't just like dole out $6,000 to memory lane and then stick it to the library board. Like, you know, like.
Well, I'm not saying stick it to the library board, but we have bylaws in place. And I will not vote to go against what that bylaw read. I just won't.
Right, but that's fine, but others can if we come to a vote. The thing was, we can't blame the library because they're volunteers for failing to ask for their R&M budget, right? So now we're in this conundrum. We're responsible for the bill, like we have to pay it, and then we have to educate them on, listen, you have to ask for your asset management budget every year so that we can give you the money up front.
So I have a question. Can you answer how come we pay building insurance on the library? I know we always have, that's not what I'm asking.
Yeah.
Okay. Why we pay insurance on the library building, but we don't pay insurance on any other building that we rent and lease?
I have an answer. Because it's in the agreement we signed with them.
When you look at from a user base, Marty, like the people that use the library are like all citizens. The people that use the rink, they're ponying up like $1,000 or whatever it is to go use the rink, right? So you have a payer use system, and then you have a system that's a non-payer use system. It has to be funded by the public body who owns it, which is us.
I see what you're saying, but everybody says the arena and them are different. No, they're not.
Well, they're user based.
Yes, but if you take aside, so you take their electric bill compared to their electric bill, their insurance bill compared to that insurance bill, and look at the difference.
Okay, now you look on the revenue side. Which group can actually charge their clientele
Well, that's
money? The library can't. They don't.
Well, the Lions pay 200 and some memberships supposedly,
Mhm.
right?
So I'm just saying,
Let's
if you
say
look
you
at the
golf
ability
tournament.
to build revenue from the clientele, like fundraising is not just changing your structure, right? Like, so you have a user pay structure and then you have a public fund pay structure, right? Like,
Mhm.
so they are different. They're fundamentally different in how they generate revenue.
Yes and no.
Point of information. I just think to that point, that is why the Municipal Government Act has a clause that empowers municipal governments to reserve a line to contribute to those public entities that cannot generate the revenues. That's just my.
But
Anyway.
I see it from an operational point of view, but like a capital is completely different though. It's, you know, if you're struggling to keep the doors open, that's an operational.
Mhm.
And then, but the capital is something else. It's completely separate, right?
There's no
But this is an R&M, right?
specification. Yeah, there's no specification how a library uses the money. I'm saying that they could have a capital line.
Yeah.
We could be using it to pay the programs, right? Or to pay for their technical stuff. It's just that they have the capacity, or they are empowered to request money from the government to make up for what they can't meet in their budget for whatever reasons. And the Libraries Act, one of them, is very clear that we don't create their budget or change their budget. We just tell them what amount approval from their request.
Yeah.
Okay.
So that's information.
Okay.
You wanted a motion about meeting with them or no?
Meeting with the library?
Yeah, you said something about wanting 2 people to come. I didn't know.
No, I'm just saying,
By the end of the, before the end of the year.
Oh.
well, when you said
Yeah.
that they come and bring their budget, they meet with us, we have a discussion. I would like, and this goes for any time we have guests. We don't have the space for 6 people to come here.
Mm.
2 people maximum come and have a discussion with us about it on any board. So, right? And we'll sit and discuss it. We have, I don't ever recall seeing the budget,
Library budget?
library budget.
No, we have, and we accepted
Yeah.
it
Yeah,
in a motion.
yeah.
Oh, yeah, but
Yeah.
no, sorry,
Oh.
I'm not, sorry, I'm using the wrong word. I guess basically strategic plan will be.
Oh, and
right?
then.
We've never seen what they're wanting for the
Yeah.
Like an asset management.
Yeah.
asset management plan or whatever, yeah, is what I was needing, so.
So that's what we were talking about, creating
Yeah.
one so that we can see and say, okay, well, obviously we need to replace this in so many years, so we should be putting away this
Yeah.
much, right?
Yeah.
So, yeah.
Well, do you
meet
want
those
to,
needs.
I'll make a motion that we yearly have a meeting with chair and vice chair or chair and treasurer, whichever,
To discuss
to
budget
discuss budget
For the
and
future.
funding
funding for
for
the,
future.
for the next year. Okay.
Yeah.
All right.
Upcoming year.
All in favor? Carried.
I mean, should we make a motion to just pay this invoice, just get it done? Because I mean, they can't pay it, right? So like, we can't loan them the money, they can't pay it. Like, it's already paid,
Yes, we've already paid it, so. I
right?
don't-
So I mean,
Yeah.
I
It's
think at
just
this
gotta-
point, it's just water under the bridge, is it not?
Call it the wash.
Like the
The
invoice,
trouble is, you guys, it's written in the policy and bylaw, right?
The bylaw.
So you cannot just make a motion to go against that bylaw. I don't know how you can do
but
that.
it's an interpretation of the bylaw. It doesn't say specifically that the library pays for the buried water line.
But the
valve
lease
in the
agreement
drain.
does.
We gotta go, it's still an interpretation,
Well,
What
right?
is it?
Like,
No, what is the bylaw? say?
I'm looking
Sorry.
for it. We're on the same.
Yeah. It says that the library will be responsible for the maintenance of the
the
building.
repair and maintenance of the building.
What we
right?
need is the agreement.
So this is a service, this is
Yeah.
a service outside the building.
But it's the bylaw that will,
Well,
Yeah,
the
and
the interesting in the history of it, the bylaw that is still in the books, and it's not here because it's super old and we found it like in a funny place. The bylaw was the very first It's interesting. The bylaw was the very first agreement, and the first agreement is called a deed of agreement. And it was in exchange for $3,000. They got the deed to manage the building without the village, but that was the little building. And then that was in 84. And then in 89, the library moved to the new building, and the deed was turned into an agreement, a land use agreement or lease agreement. And that's where the current language came from. And so, and that's where, so for $3,000, they got the right to have, they didn't own the building, but they could act like owners of the building. But that was the little one.
Mhm.
And then in the new building in 1989, that identity of ownership
Just
carried
moved.
over. And so that's where all the language in the lease agreement since then that was signed every 15 years that's where it all came from. It hasn't changed. It changed one time since, and that was when the village agreed to not charge the library for utilities because we weren't charging the church for utilities. And they found that they shouldn't be charged if the church really needed to be charged. And that's a letter, and that was signed, and that was also early 90s or late 80s. And so, yeah, that's the only time it was changed. And then it's been the same ever since. And yeah, my signature is on it. And then it came up for renewal once, and it hasn't been signed since.
So the village pays the utilities for the church?
No,
Well, not anymore
Not
because we don't do utilities at all now. It's all WRC. Yeah.
Right.
And we don't do theirs.
everybody has their own water, sewer, or
But there is a line in the library's lease agreement, now coined lease agreement, that says that the village will not charge for utilities, but it's a defunct line because it doesn't matter anymore. Because the village doesn't
Yeah.
require
No.
utilities.
Does the village have the authority to change the Municipal Governments Act?
No.
Okay, so the Municipal Governments Act says that the owner of a building is responsible for the services coming into them. That's what the Municipal Governments Act says. So by us saying that they have to pay for that, that's a breach of that.
no, because you have an
Is it not?
agreement, you have an agreement and a bylaw that says that they will be responsible for the maintenance and the,
Okay,
They're also not considered a tenant. See, that's the interesting thing, is the language of the lease agreement doesn't refer to them as a tenant. It refers to their subtenants, the people who rent out their space, and that they can keep all the revenue from that, et cetera, but they are not listed as the village's tenant.
Because they're not.
They're not.
They're not. They're the building manager.
Yeah, they manage our building, right? Like it's our bill.
Basically, all our buildings are that way. They're managed by the people that are,
yeah, they're leased by,
they're leased and they're managed by them.
Yeah.
it just seems, this is my opinion of the whole situation with the agreement issue that's going on.
Mhm.
To me, the agreement that we have signed with that particular entity seems to be, in my opinion, very ambiguous. So it opens up a realm of disagreements. So when we decide on another agreement with them, it needs to be more succinct. Yes, that's my thought.
It's written in arbitrary Old English.
Pardon me?
It's written in arbitrary
So-
Old English.
yeah,
There's a lot of
Yeah,
interpretation.
yeah.
so there has to be.
It can open up lots of different wormholes, is what I'm saying.
And again, I mean, yeah, like you say, like, for example, the fire department, we have a agreement, it's a 65-35 split, right?
Yeah.
So, but at this, they pay part of the bills, we pay part of the bills. So, but at this point in time, the village doesn't charge them for the building, rent. or charge them for insurance of the building. Yeah,
Charge who?
the library.
Right.
See, all the other groups pay for their own building insurance.
Yeah.
Yeah.
Well, I mean, in my mind, we have a stone. We're trying to squeeze blood out of it.
Yeah.
No blood's going to come
Oh,
out
no.
of it. They can't afford it. The bill's paid. Like, I mean, at this point, we need to move forward from here and just tell them, listen, either you create an asset management plan so you can budget for these types of things, or we have to do it under this community service GL. But they're the building manager. They're the people that know that building. They know their cost history. They're the people that should be managing their own asset management.
Yeah.
Right. So that's, in my view, that's the preferred, that they manage it properly.
Mhm.
Like they were in the past when they were getting, whatever, $1,500 or $4,500 a year. But I guess from my point of view, at this point, like you're right, we don't need a motion. That bill is already paid. I mean, I think we just stop squeezing the stone. It's the past.
I disagree. Just because of the fact that it's a bylaw and they've read it and they've signed that lease, why have they not noticed it before?
Sure.
So they're not reading it, obviously.
Right, but they made a mistake in not having an asset management, and not asking for this money every year, right? So
Yeah,
that mistake.
That's their mistake too, right?
Okay, yes, and it's also council's mistake for not going, hey, wait a minute. You used to have this money you got every year to fund stuff like this, and we haven't paid it in 7 years. What if something goes wrong, right? And we are the ones, the council's the one that approves their budget for our building, right? So responsibility is shared. Like we can't wash our hands of this because we were the ones that approved their budget that didn't include an asset management plan, right? Like
We shouldn't have to hold people's hands up,
Yeah,
right?
Well, I mean, but
We're not here to
I
do
mean,
that.
like
They're there for a reason. They have a board for a reason, right?
right, but it's just like our budget. It was just like the last year's tax budget. There was an error in it. We missed it as a council. The government missed it as a council, and it'll be repaired this year, right? So the same thing. Their board made an error multiple years in a row, budgeting and not having an asset management plan. This council missed it multiple years in a row, and then an invoice arose, right? Had they continued to have an asset management plan, they would have had more than enough money to do the repairs, which was like a line break. In the past, they managed their books and replaced sidewalks and ramps and windows and roofs. And so, I mean, at some point, we just have to let bygones be bygones, right? Because whether we had given them $7,000 or $2,000 or $10,000 for the last 7 years, and they paid this bill, we would have still funded this bill. Is my point of view.
Well, you know my feelings, because I don't know if that money, even if we would have given 5 a year, would it have been there right now to pay the bill, right? Because we don't. Anyway, I'm done with it.
Well, this is where in the agreement, that's where they become responsible for the upkeep of the building, right? So, I mean, if you give them money every year to put it towards the capital projects or whatever, then something happens and they should have.
It would come out of their asset management budget, right?
Yeah. So.
Well, we're kind of beating this to death.
Yeah. So we definitely need to, like for sure, like we are huge on asset management now because we know that this is going to steer us in the future, right? So we have to, like this year is the big, we've got to kind of jump into it a little bit more. We got to get everybody else on board with the same thing.
Yeah, I'll make a motion. I'd like to make a motion to instruct the staff to have a discussion with the library board about asset management and the responsibilities under their lease, and do the same with all of the other groups that are managing our buildings, so that we are talking to all of the people that manage our buildings and advising them to make sure they're doing an asset management plan so we can avoid these types of things in the future.
Do
or some words like that, Jen.
Don't distract me.
Sorry.
Well, we are going to be meeting with the groups, so maybe
Yeah.
we can incorporate this all together and say, listen, this is where we're going. And we would like to see you,
We need you to follow.
well, we would like you to take the steps, right? Like, I mean, we don't want to do them, right? But take the steps into, and once you start, then you're going.
Yeah,
It's just a
we-
momentum.
We see the value in the
Okay.
process and we'd like to see them do the same.
Well, and to your point, we've seen the problem it causes when it's not done.
Right. Okay.
Okay. All in favor of that motion?
What is it?
Motion to move to instruct the staff about oops, forgot that portion. To contact the groups about asset management and responsibilities under their lease so that we are talking with all the groups and ensure the buildings are well maintained for the future to that degree.
Something like that. I like-
Right.
yeah.
I'll go back on YouTube and wordsmith it better.
All in favor? Carried.
Mhm.
Standard rural fire agreement lease.
We'll table it till the agreement is drafted.
So you want to move to table?
I'll move to table.
All in favor? Carried. We want to move to appoint John Getz to Marigold Library Board. So moved. All in favor? Carried. Letter from Minister of Health.
Yeah, so we sent a letter to the Minister of Health and they responded back. So they did suggest that we contact Alberta Health Services because they are the in charge of the hospital and let them know that we are in favor. So that letter was also in the package. So
Okay.
it's just information, or
Okay.
we can,
We want to move to accept letter.
I'll make the motion to accept
All
the
in
letter.
favor? Carried. 6.81, 60-day notice from AB Muna sent to library and curling club to lower risk of potential claim.
so in your, what was it, last month or the month before, where we got our evaluation from the insurance, and in there was some
before.
recommendations, and the
February.
council made motion for us to send that onto the groups.
Actually, it was in December. That was
December?
not the first letter
Okay.
that went out to the groups.
So we did that, and we sent out the letters, and gave them what the recommendations were from the evaluation from Alberta Munis. Now we've gotten our 60-day notice, so we have now again sent out a second letter. Or this is the second.
It's
Yeah.
it's the third communication.
Yeah,
It was, the first letter was sent in December, an email with the original letter was resent in February, and then a new letter was sent just last week.
so
What do they, sorry, what do they need to do to lower the risk of potential claim? What are we asking?
Clean out the mechanical rooms of flammables.
Yeah.
Make sure that there's a direct path to the exit from, in the case of the curling club, from the ice to the exit door, that there isn't chairs and tables in the way. Curling club needs to make sure that they have smoke detectors and carbon monoxide detectors installed. Whether they're plugins, they recommend having it wired in, but having the detectors there all together. And both of them need the mechanical rooms cleaned, and both of them need to have, I think it freaked the library out a little bit, a water escape plan. But the water escape plan is, if you finish reading it, is to make sure all the staff and users of the building know where the water main is, how to turn it off, and to make sure there's nothing around that could get water damaged, and who to call to get.
just a plan.
That was talked about in the last meeting. So,
Was it?
yeah, so it's all done.
We want to move to accept the 60-day notice.
I'll move to accept the 60.
All in favor? Carried. Financial reports, move to adopt March reports.
I'll move that. That's what you were asking for?
Yeah, all in favor. Carried. Correspondence. Did you get a price on what we're gonna be paying for policing this year?
Yes,
And you wanna,
it came down a little bit.
it came down?
Yeah.
Yes,
By
Just-
almost 2,000.
yeah.
Why is everybody else's going up?
I don't know, we got ours, yeah.
Because we're squeaky clean.
Because they'll be here, right?
They don't, never mind. So we want to move to accept the correspondence as information. Larry, all in favor? Carried.
Bless you.
Agreement.
Bless you. Bless you.
Stop being greedy.
Oh, we need somebody to move to accept the weed inspection agreement with the county of Wheatland.
I'll make the motion to accept the weed inspection agreement.
All in favor? Carried. Rodeo Society sponsorship.
So last year, we sponsored them 1,000. So they are ahead of schedule this year, and they are doing lots of work over there. So this is for the standard
Kids
days
rodeo.
again.
Yeah.
Yep.
I'll move to
Same amount.
same amount.
All in favor? Carried.
So we'll add that into the budget.
Stop sign at Broadway and Frederick. Move to approve Public Works to add new stop sign on the corner.
Yeah.
Oh, you forgot 9-3.
Marty,
You missed my.
Oh, I'm sorry, you guys.
Oh,
Looking through the wrong part of my
Yeah.
glasses. Let me put my head down. Wheatland Housing Management Body audited financials. It's pretty moved to accept those
it's information.
There's information.
as information.
I'll move to accept on this information.
All in favor? Carried. Okay, now onto the stop sign.
So yeah, we had talked about this before and everything is here. We just want to make sure that council was on board. So all the streets, okay,
You want me to push?
yeah.
Yeah, put that up there.
So streets that run west, east are always the throughway. And the north and the south are the stops. So if we were to look at putting, there's a stop sign already at the corner of,
Hang on, getting there.
the store and Frederick, we would just put a stop sign and we would make sure that we put up ample, like, new signage,
So
like.
you're saying there's a stop
There's
sign
one right there
here.
There
already.
is one
There's a
there.
stop sign here,
Yeah, that one we would remove, so the traffic would go through,
would go
But
through,
north and south
would have to
stops
stop, so you want a stop sign here.
there, yeah.
And take the other one out.
Remove this one, add that one.
And we'll put up extra, like, new signage,
stop
yeah,
sign.
new,
Well, if you already have a stop sign there, what difference does it make?
yeah, we're just putting one, no. Well, it's either that or you make it a four-way, everybody stop.
No, I liked your plan. Just stop the north-south traffic.
Stop and stop.
Because right now we have this, the stop signs aren't aligned properly.
Oh, so you're talking
Well,
about
there's-
putting the stop
There's
sign,
only one stop sign at that corner.
So there's a stop sign here.
yes,
There's one here, and that's it. And
okay.
they're saying remove this one.
Yeah.
And relocate it here.
So you're
So
stopping,
that
you're
these
stopping the north,
stop.
south, okay, yeah,
That
I'm
these
with you
move.
now, okay,
Yeah.
that makes sense.
So while you're looking at stop signs, go up onto Rasmussen Place. So coming out onto First Street. There's no
stop sign.
There's no stop sign
Right
there.
here.
No, and
Does there need to be one? Should be here from onto Is there, like we've seen need
Oh,
obviously.
just about every morning for
Oh
me,
dear.
pretty close.
Might
We
be
don't
good
have
for
to do it right now,
pedestrians, too.
just put it maybe on the back
You
note.
want
and
one
just-
on that corner?
Well, I don't understand why there's never been one there.
Is there one up on yours?
No,
None,
there's no stop signs
no
on that
stop
road
signs
anywhere.
anywhere there, yeah.
But I mean, there's one house that lives
On
past
those,
my
yeah,
corner, right?
yeah,
Can you
So
go
there-
north, Jen?
So if you go north
yeah.
to 11,
There's a couple.
there's, well, two houses. I
Yeah,
You wanna
guess.
that's
see?
it. Yeah,
There's one house, so we're not gonna put a stop sign there. We just have to pay attention, but I don't know how we do it at that cul-de-sac. I've looked. So anyways,
We
That's
just
just-
need the stop sign coming, like heading
heading
West.
west out of
onto
the
the
cul-de-sac.
Right here. Yeah,
Yeah.
and there's a stop sign here, so everyone coming in.
Stop
To the-
sign on main road.
Whoop,
Onto
sorry.
Ninth, yeah, but there's just nothing
Yeah,
out of
that's kind of
Rasmussen
a
Place.
detrimental place, isn't it?
Well, every morning it's the same vehicle. and I just know, so I watch. But anyway,
Okay.
just put it on the back burner for now. It was just a pop into my head. So does somebody want to make a motion to
I'll move that.
change that stop sign?
To change 9-4 to move the
Yeah.
stop sign.
All in favor? Carried. WID 1-year extension.
Yeah, so it came to our attention that, well, the person that's usually in charge of this is away on mat leave, so of course it got I think it got missed. So they would like to just do an extension, and then the next motion will be for us to negotiate.
I will move to extend to agreement for 1 year. All in favor? Carried. Next motion to negotiate.
Well, yeah, so administration will negotiate and the agreement and bring it back to present to council for approval.
So what is the WID agreement?
So
Just
we-
discuss, like, what are the highlights?
So we will be,
Well, we own water rights.
yeah,
Oh,
water
okay.
rights. So we pay for users. So every year WRC will give us a report. We have so many users. So like, for example, we're gonna have more users in the residential district, so they'll
Yeah.
add them to the list. So you might see a little bit of an increase in the rates. We do get, like we have 190 users. We pay for 100. Yeah, just little things like that.
Okay. Thanks.
Then there's there's 2 other categories that we pay for, which will be like industrial users.
Okay.
So it depends if they fall into that group. If they use that much water, then they'll be in that category for that year, right?
Okay.
So it's based all on 2024 numbers now. So it's what we'll pay in 2025.
Okay, so we paid WID and then WRC bills. Oh,
Yeah, we
all
pay the
the
WR,
users.
yeah,
yeah, so we
Yeah.
buy the water, WRC treats the water and then bills the users.
yeah.
Yeah.
So I can actually bring the category stuff at the next meeting. You'll
So
see. It's really simple,
Mhm.
right?
Mhm.
But
The
you have
reservoir-
3 different categories.
The reservoir, the WRC pulls the
Yes.
water out of this WID water.
Yeah, it's got
Okay.
WID water going in it. Yeah.
We all have a surface rights agreement, I guess basically it's
Mhm.
called, is it not?
Yeah.
So we have a percentage.
Okay.
Every municipality, we've always had it. We just basically, we keep that right, the water rights. But we
Put it into the
do the
WID,
WRC.
WRC. And the other communities using water do the same?
Yeah.
Okay.
Everybody pays.
Everybody does.
Okay, thank you.
Okay. Reports.
Oh, so.
We need a motion. I'm sorry.
Yeah.
I'll make the motion.
All in favor? Carried. Glimpse of Mike.
So the last meeting with Densa was on Monday. And let me just find my notes. Give me 1 sec.
7. I'm not gonna look at the.
Monday was the 7th. Okay. So, and our next meeting, it will be May 5th. So what's going on with DEMSA right now? So there's a few people retiring, as you know, Rob and Donna. Kevin is on leave. So we have a new CFO hired, Kara. She's apparently doing well. She has a accounting background. She was at Gregory Harriman before. Ryan's doing well. We're contemplating whether we're going to, Ryan is interim, right? We got to fill the CIO role. So there's discussions there on how we're going forward. Call volumes and all that is good. We have a service agreement. The small towns Rockford Standards are not looking for a service agreement, but Wheeland and Strathmore are looking for a service agreement. We got a draft agreement. It was not worded like a service agreement, so we're going to take that out of the CAO's hands, and we're probably going to have to deal with it at a board level. There's something beneath the surface that we need to clear. We're gonna do retirement and board and gifts and long time service. There's a long time service there. We did get a report note that the corporate atmosphere is positive. Things are seems to be the staff are happier. They're happy with the way things are going. So it seems we might come out of this chaos looking well. So this just the next thing we're just kind of battling through is with the Wheatland and Strathmore fire chiefs and what they want and what we do and how we work through a contract because they want an official contract. And the biggest thing up in the air, so you guys are aware, is there's contract negotiations with AHS and the union. And those are going well, they're ongoing. That'll probably get solved. But there's some question whether AHS wants to take over and not have contractors. So like with EMSA, we're considered a contractor. So there's locations where AHS would do all the service providing that what EMSA does. So that makes it challenging for a number of reasons if you don't know how stable your future is. But so as of today, we exist and we're planning for the future and things are looking well. The books look good. Financially, Woodemps is in great shape, much like we are. It's been very responsibly run. So nice. We would like some certainty from AHS. So what I would like from you guys is if when I go back to the next Woodemps meeting, I would like to ask over there if we should be providing a letter to AHS saying whether we want to keep Woodemps or we don't want to keep Woodemps. Because I think we could help motivate the AHS because this is all going to be a political thing, right?
Mm-hmm. I think that.
What do you think, Marty?
I think it needs to be a question put to
them first,
but it needs to be all municipalities, right?
Yes,
not just us. So if you were to put it there, I have no problem doing that. Absolutely not.
Do you want me to make them like when I go back next meeting to say like standard, we would be willing to do this, but we want all
of support. Yeah, exactly.
Yeah. Do you guys agree?
Yeah.
Address them to reach out to all municipalities requesting.
Yeah.
Okay.
You don't need a motion to do that.
Okay, because I wanted you guys' support to do that because if we don't do something as municipalities, we might lose Woodemps. And in talking to a lot of people, a lot of people don't want to lose Woodemps.
We can't lose them. Been too involved with them and other areas doing dispatch and stuff. No, we have to keep them doing what they're doing. They do a great job. They're and I've told Darcy this too, and I've asked him to relay. You go to a fire scene or even when they come and pick me up, they're an amazing bunch of people.
Mm-hmm.
So your staff is phenomenal. Yeah.
So yeah, okay. So I'm gonna go when I go back. I'm gonna bring this to Woodemps board then that we seek support letters from all the communities that are serviced.
Yeah.
Because we need some political. We need a little bit more political weight. Otherwise, if we stand on the sideline as towns, AHS could just make a decision, and then we're gonna have to respond, and we might not like the
that. No, okay. That's what we have collaboration meetings for too, right? And that's what we're trying to do.
Yeah. Okay. Thanks, guys. I'll do that. I'll bring that up at Woodemps next time. I'll let you know if they agree.
Is that it?
That's it. Yeah. Thank you.
Wheatland Housing Management Body. Our last meeting was March 20th. We sent 5 to the ASHA convention, which I believe was a week and a half ago. I did not get to go again. Didn't want to, but we are actually working on. We've never had we've always had an emergency response plan, but it's been pretty small. Basically, if there's an emergency in the lodge, what do? So we've formed, there's 3 of us right now, there was 4. There was 5, we lost 1 board member. We've been tasked the job of making a major emergency response plan, so if we have to vacate the town of Strathmore, what do we do with 93 seniors? It's amazing, the amount that you don't think about until you start doing that, so that's been ongoing. April 17th is our next meeting.
Next meeting is April 17th. It is a couple next week. And I reported on the last meeting last time. We only meet every second month. Did you send that letter to them regarding the disruption of the services?
Yes, we did.
You did?
And we got a
Okay.
reply that it'll be on the agenda.
Okay, good.
Okay. WFCSS, Richard.
March 26th was our last meeting. Right now, we're still having a lot of good response to the good food boxes, which is showing the increased demand for the service. Right now, we're focused on trying to get the word out for some of our programs and to get their rates, cooking with the kids programs and stuff like that in the communities. And our next meeting is April 23rd.
WRC, our last meeting was our AGM, it was March 26th. I don't even know where to begin. There was a lot of very good information that come up. A lot of information has gone to the lawyer because we've always been running as a municipal board. We're not a municipal board. We actually are not considered elected officials when we're in that room because this is a shareholder corporation. So we are directors, not elected officials. Part of the problems, part of the questions that come up is so shareholder corporations meetings are never public meetings. They're basically in camera, so that means no guests, no. So all these years, we're not 100% sure yet how it's going to go. Like a lot of these questions have gone to the lawyer. So if it comes back saying, yeah, shareholder agreement or shareholder corporations are different, so then we wouldn't, whoever's sitting on that board would be there just as a director. It would be basically just like EPCOR is in Calgary, right? It's a private shareholder corporation, so there would be just one director from every municipality and no alternates. I don't know, it's gonna be, there's a lot of questions come up, so I don't know if we've been doing wrong by all the information. And it kind of makes sense when I think about it, like if I had a counselor sitting in this room that was working for another water corporation, and I bring information from our meeting to this meeting, there's nothing saying he can't take that to his corporation, right? So it's like Bay's giving Simpsons their information, kind of. So see what happens. Next meeting is April 16th. Community futures.
Okay, so we got a meeting on April the 3rd, but on April the 3rd was kind of our, we were going over kind of some of our budgets, outstanding debts, taking care of stuff like that, unrecoverable loans. Went over our renovations downstairs, which are progressing very well. They're moving ahead quite good. We also did our SWAT training on April the 5th, which was an all-day thing for kind of moving forward, how we want to increase visibility, get out there and aware in the community. And our next meeting is May 22nd.
Can I just jump back 1 second? Housing, can you just add this to my report? Sorry.
Oh.
We are in strategic planning Friday night and Saturday this weekend.
This
You just-
weekend,
Yeah.
for 11,
11th and
12.
12th.
You start ready?
Yeah. Some fun. Library, Larry.
Last meeting was April 7th. They found out that they have to change their date for the golf tournament, but it's still a goal. They're in the process of getting all that stuff planned up. And we talked about the water line and all that stuff we just talked about with the asset. So they know what they're doing there. Next meeting is May 5th.
Solar proposal.
All covered in the strategic plan.
Arts and MP stamps. Stats.
Actually, there was none in the package, sorry.
Okay.
Didn't come in.
Ramp.
Larry, did you want to speak?
Yeah, there was I can't remember when the meeting was. Yeah. There was a whole lot of new faces that I wasn't sure who they were. But they're going to be involved. Alberta Incident Management System was there. They're going to be based out of Edmonton, but they have an office in Calgary. So they will be, when it comes up and running, they will be sending out the responses to these special needs that we'll be having. They have to rewrite the emergent management partnership plan again. That has to be, they're in the process of updating that again and getting that all changed up. Other than that, it's same old, everything's organized, who's doing what, 4 fire departments involved. And they seem to be doing a pretty good job of getting it all figured out, so I think we're in a good state. And people who have made reports with as far as the training systems that we've been doing, it's all been really good. So there's been good response to that. So I think we're in good state of repair. Everything's moving along. Good. Considering it's a new incentive and it's quite big.
It's a lot of work.
It's a lot of work, yeah. So the next meeting that we will be having is
Yeah, it's 6 months from now, right?
yeah, 6 months, September 11th, 25. Yeah.
You want to move to accept reports as information.
I'll make that motion.
All in favor? Carried. Bylaws and policies. We want to move to adopt the policies from March 12th.
I'll make that motion as well.
All in favor? Carried. Policies, new batch, April 9th. Move
Yep.
to accept policies for review at the May 14th meeting. I will move to accept. All in favor? Carried. Public notification bylaw.
So just to clarify, we got a few motions that we'll do on this one because the public notification bylaw required a public hearing. So the one we have is really not valid. So we will give first reading to this new public notification bylaw. The next one, we will rescind the old bylaw, and then we will go into advertising and schedule a new public hearing.
Do you want a motion for each one or just do them?
Each one, yeah.
Okay, I'll make the motion to move to give first reading on bylaw 2025-2 public notification bylaw.
All in favor? Carried. Next to rescind. I will move to rescind. All in favor? Carried. Advertise, move to advertise and schedule public hearing on bylaw 2025. Who wants to do that one?
I'll make that motion.
All in favor? Carried. Council procedure bylaw.
There's an 11E that we added.
Mhm.
Well, that's the
at the
No.
agenda.
Oh, so,
Yeah.
yeah, you did.
This is the added
It's
moment.
Oh,
the
Red.
procedural bylaw.
Yeah,
Oh, okay, no.
11F.
Sorry, I called it 11E.
Oh,
in the
okay, it's
agenda
F, yeah,
package.
okay.
It's actually
Yeah.
Okay.
Sorry.
So, yeah, council procedure bylaw, this is the one that thought we had from April 30th for 6 months, but it actually needs to be done by April 30th. So all it is we have to just have access for, if we have a public hearing, public has to be able to electronically, be able to communicate and speak electronically.
So we had to put in a section about that.
Yeah, so the rest of the bylaw is still, remains the same. We just had to put in the section of the electronic communication.
The new section is section
So-
8.
So you actually have it on the table today,
Yep.
this bylaw. So I've highlighted, we had to go with definition. So we've added the definition on page 2, I think it is. I've highlighted it. What electronic means definition. And then page 8, I think that's what Jen said, yeah. So it's quite a bit, but it covers everything, so. Let's see.
And this one has to go to public hearing too, right?
Yeah.
So basically the same motions
So-
that C, D, and E.
Yeah. So this is, oh, this one here, no, we are doing all 3 motions tonight.
Oh, it doesn't need public hearing?
No,
Oh, I put a public hearing line at the end of the,
oh, okay.
no, on the bylaw.
Oh,
I thought it
yeah,
needed it.
okay, sorry.
Okay.
Maybe one move first reading.
Was this in the package online?
No, this is, we just discovered this, so, yeah.
Just in addition, it's amendment.
So everything else is the same except for that, just that page 8 where we have to add in the way. So
The
that
access.
Electronic.
access to electronic, yeah,
Oh, okay.
so,
And then the big bulk section on the next page. No, go back where you were. The highlights on the one page.
yeah,
And then
yeah, this one and this.
that page, that big bulk is the procedures of a public hearing with electronic. That's just, that's why it's so massive. It's just outlining the procedure.
You're asking for motion for first reading. I'll make that motion.
All in favor? Carried. I want to move second reading. Misprint, read.
Second reading.
Oh, yeah, I'm ready.
Larry, all in favor? Carried. Move to introduce third reading on council procedural bylaw. Also move third reading. All in favor? Carried unanimously. Move for third and final reading. Only got one guy left. You want to move third and final reading?
No, I don't want to do it.
I'll make the motion.
All in favor? Carried. Budget 2025 draft number 3.
Okay.
Cab mower / mower.
Yeah, so we just actually got a couple of quotes, so we were just, are we interested in trading in the other mower for just the
0 turn.
0 turns?
Is it these papers you wanted?
No, the dollar. I just got a quote today. Maybe not.
Do we have 2 of those right now?
Well, we have the cab. The cab one is the one that we use year round, so that one will remain. But the other one is it's a glorified lawnmower, basically, right? They don't
That's a
need,
cabless lawnmower.
yeah,
It's not a 0 turn though.
no. So it has less hours. But I mean, this is just all to consider for when we're doing budget. So a gas one will be 11,000.
What's wrong with it?
Oh, no, we would just trade this one, a gas, just to get a gas one, versus the diesel
So
tractor,
the
basically.
diesel,
Yeah,
because they do the regen, these things.
Yeah.
They get to a certain, and they start, one in Rocky Ford, we had, it was doing a regen about every 3 hours, so you'd sit for half an hour while it did its thing, you can't do nothing with it. And, they've taken, if we go to a gas, we don't need the regen. We had an issue where it blew the turbo and, blew oil all through everything, and it was 20 grand to fix it. So.
Did you guys look at deleting it?
Yes, we did. And
Why didn't you do that?
you can't.
What does that mean?
You couldn't on that year of, there was no, we had it at Kubota for a year, just about a year, 8 months.
Oh,
could
they didn't
not
have
do
it delete.
They could not do it. No. So you get rid of the diesel and you go to a gas, you don't have to worry about that turbo and all that crap, and it's just a smaller mower, it does the same thing.
Can we look at the delete option if there is?
What year is it?
these are brand new. These are.
That you're not gonna get a delete option on them.
The delete, the diesel.
I think these are.
You can look into it, but I would bet with. the
No, like
dealer
we're
we
talking
have-
about, we have a diesel currently, right,
Yeah.
on standard that we'd get rid of because of
Yeah.
a pending or potential challenge with the.
Oh, I see what you're saying, the delete option on the next.
On ours, on our own.
On our own.
Because if we're getting rid of it because we're afraid that there might be an exhaust challenge in the future.
Just explore the cost of getting the delete done.
Yeah.
Well, you can try, but I can pretty much guarantee talking to that mechanic and how long, because they sent our mower further north and he couldn't do it. So, you
That's
can
good,
try.
the options here.
I think
So-
so, 2017.
Mhm.
The
Ours
mower?
are 2017.
I think so.
Yeah.
That's a good idea.
Let's,
So like
Yeah, you know what?
the one
11,000
is got the
big-
low miles.
It's
but
Well, I don't
full
think we need
hours.
to worry about it
It's a-
this year anyway.
Yeah, 11 grand's a big bill for something that's not wrong.
No,
And then you just
Oh.
pray because like I said, it was 20 grand to fix it and we couldn't get 20 grand for it after, right? And that mechanic told me, and that's one reason I do not like Kubota mowers. He told me that don't ever buy it. This is a Kubota mechanic. Don't buy a Kubota mower.
A diesel or gas,
Diesel
or he
mower.
doesn't
Do
care.
not buy a diesel Kubota mower.
Hmm.
I'm pretty sure that, you know what, I'll look in to see what year ours was, because
Yeah.
ours was, but I'm pretty sure it's about the
So
same.
we'll get more information, but I think the
Yeah.
whole, I would, before we go into budget, I think we should just set a budget meeting date.
Mhm.
Because if we don't, I need a motion to pass an interim
No,
budget.
just figure out another date, send out a email or whatever to everybody.
Well, no, I think we should decide
We're doing
tonight.
tonight?
Yeah, because that doesn't, because it was like, okay, you weren't available the one week, Larry was gone the next week, it just didn't work out. So, but Richard, you have a meeting next, oh, no, WRC.
I will tell you, the first week of the month is the best week for me. Second. Well,
Okay, well then we need a motion
well,
to,
maybe the fourth, just let me look.
Or are you thinking like meeting right away, like next week?
well, I was thinking, yes,
I can't, next week I can't.
and the week after,
The week after probably could.
but Richard is committed on that day, I think.
I can't on the Wednesday, but I can do it on the 21st, the 22nd, 24th.
Which,
So the Monday, Tuesday, or the Thursday of that
oh,
week,
okay. What about the Tuesday,
22nd? I'm clear on
April
that.
22nd?
Sure,
Everybody good?
think so.
Okay,
22nd?
Yeah.
because if we don't, we'll have to,
Yeah, that's right.
What time are we
Yeah,
gonna set it at, 7 or 6?
we can do 6.
No,
No?
7?
Oh,
6:30 at the
6:30?
earliest.
Okay.
Okay.
6 is just too much of a rush.
Okay.
No, as long as it works for 6:30.
So yeah, so this is stuff we'll get out to you. We are in the budget process. What, about 40,000? We're still looking,
Yes.
yeah.
So no, you can't have a mower this year.
No,
There's
if we
your
trade in
answer.
one, we might actually, the trade-in value might just be right there too,
Well,
right?
we'll see.
So,
Okay.
yeah, so we'll
Okay.
get more, that, this just came in today,
Okay.
so. Also, like, anybody that wants to do the training, again, for the, review boards, by September, they will start charging $300 per
I think I
session.
need to, don't I need to do that?
You need to do the subdivision, oh no, you can't be on subdivision development, you could do the appeal board hearing. For assessments. So anyway, we'll
Okay.
figure that out, but,
Okay.
another interesting thing that we did come across was the Strathmore Now. They came and presented to us and it's kind of, a no-brainer for me, but they presented us with, do our website, which would be offset by advertising. And then there is a monthly fee, but they also do work for us for 1 hour a month. The cost is, what was it?
To set up the website is 5,000 and the monthly fee is $90.
But
The
they
website
offset it,
was impressive. Yeah, and
they
then,
offset it by advertising,
yeah, they give you free advertising of the equal amount.
which we can do in our public notifications, right?
Okay.
So
That's all it, you've got that, it'll all come in the budget.
that'll all come
Okay.
into the budget, yeah.
Okay, 11/3 sale collaboration meeting. April 15th in Strathmore.
Yes,
What time
so
is
that's,
that?
that's the
That doesn't
CAO's,
include you.
yeah. So just, yeah, this is where we got to work on the terms of reference.
CAO collaboration meeting.
Okay.
This is where we're gonna work on the terms of
Yeah,
reference and bring it back to councils for
You're supposed to say good.
collaboration.
You're supposed to say good, Larry. But that doesn't include you.
Yeah.
Another meeting.
Terms of reference for collaboration and bring
Yeah.
it back to councils.
Counselor concerns, Richard.
I've actually had two that were brought to my attention that I was asked to look at. So on, with the melting snow and that, a lot of people have noticed the rocks on the grass. So they're concerned that if they mow the lawn or if when they start cutting lawns again, that those rocks are gonna fly and hit windows and cars and stuff
Get a
like that.
rake.
So that's what they were asking. They were asking them what they were gonna do with it and if it was gonna be on the village or on them to take care of it. So I was just was told to bring it forward. And the second one was somebody had brought it to my attention that when they were removing, I guess, the snow, and I don't know who this would fall under, when they were removing the snow on Memory Lane with the tractor, they've caught a bunch of the boards on the bridges and they've separated, they broke them. So they just said there were some tripping hazards on there and they didn't know
Yeah.
who would
Actually fixed the tripping hazard.
yeah.
Because it took the
It
ridge.
took the ridges off, yeah. Smoothing it out. So anyways, I was just asked to inquire on that then.
Memory Lane will probably look after that.
Yeah. So those are my only two concerns.
Bridges.
Larry, no. Mike,
No,
I have 3. Your north speed sign coming into town that we spent all that money on is not working.
Oh, on the north side, yeah.
Coming in from
Okay.
the north. It just sits and blinks at you. It does never come up with a speed.
Okay, it blinks. Okay.
The misprint in the newsletter, on the agenda or the defeated motion, it said it was passed. I would like that changed.
Yes.
I apologize for the error
Okay.
and I already have the next newsletter written with the correction.
I had a couple of people come to me and say, I watched your meeting and that was not what happened.
Yeah.
The minutes are correct.
Okay.
Official record is complete.
Yeah.
Somebody want to move to accept counselor's concerns.
You had 3 motions.
Yeah, you said 3.
I said 3, north speed sign misprint. Oh, sorry.
Yeah.
Coming into town from the north, the ditches. I mentioned to you about the water. It's not making the culverts by the hall and ball diamonds.
Okay.
It's puddled about.
Oh,
He's just gonna have to get a shovel and make a little trench so it runs away because It's just gonna stay doing that all year if it doesn't,
Yeah,
every time it rains,
it's
right?
too low, yeah.
Yeah, it goes like this.
Gotta give the duck somewhere to.
Ducks can go out of the house. Just causes mosquitoes. All right, does somebody want to vote to accept? All in favor, carried. Move into closed session.
I'll make a motion moving close.
You should read the whole motion for them.
Move to go in closed session under FOIT Division 2 exceptions to disclosure.
I will make that motion to go into closed session at 9:37 PM.
All in favor? Carried.
Okay.
sound is on. And there's a possible motion.
Well, you have a.
Motion to direct staff to continue dialogue with Wheatland County regarding the infrastructure grant.
Who wants to make that motion?
Say that again.
Motion to direct staff to continue dialogue with Wheatland County regarding the infrastructure grant.
I'll make that motion.
The 5 minutes. All in favor? Carried.
And then I'll make a motion to instruct staff to organize a meeting at the earliest possible convenience regarding the letter. That was discussed. That was discussed in camera.
I don't know if do we need to include Hazard? They're not part of this letter.
No, they're not part of it.
No.
I mean, mention it in passing.
No, I don't.
They're not formally part of it.
No, they didn't.
Well, they were at the.
But they did not.
But
sign
they
the
understand.
letter.
I think it's just a matter of,
It's just the two villages signed a letter.
Because they abstained from the letter.
motion on the floor.
All in favor? Carried. Somebody want to move to adjourn?
I'll move to adjourn.
Okay.
Jen, this is good. It's a little cheeky. Are we off yet?
No,